Well, we're back with you, and we're going to take another look at the markets to see how they're performing now that we're about 45 minutes into our trading session here on a Monday. And remember, we have all these expanded limits in effect, actually increased limits over what they used to be, and also higher margin requirements today. As we look at the corn market right now on the big board with our quotes provided by bar chart, we have July corn now 8 cents higher at 681 1/4. Now we have trimmed the early gains by quite a bit from the overnight trade. We're off of that by 17 cents now. So there for a while we were up around 24 cents higher. Not anymore. We're up now less than 8 cents. And December corn now up 3.5 at 567 1/4. Really quieting down, and now within about 2 ticks of our low of the opening range. In the soybean trade, we now have July trading 1/4 cent lower at 15.34 per bushel after a high last night of 15.63.5, and that would now be about 30 cents off its overnight high. The November new crop soybeans are up by 7.75 cents at 13.47.5, but there again, we're off our overnight high by about 16 cents right now. Now let's move on to our wheat and see how it's holding up. In Chicago, we have July now trading 5.5 cents lower at 7.29 1/4. Well, that's quite a turnaround. We're on the low of the day now, and we had a high last night of 7.53.5. So we're off of that now by about, what would that be, 24 cents right now. Excuse me, in September, down 4.5 cents. Quite a turnaround in that Chicago wheat. In the Kansas City market here so far, we have July down 3.5 at $7 even, almost on the low of the day. We're 22 cents off of its overnight high. Minneapolis spring wheat trade has July now 2 cents higher at 7.65 3/4 right now, but it's on the low of the day and off from 7.83 3/4 overnight. Let's bring in Chris Swift of Swift Trading in Nashville and talk about this. So we had a much higher start here this morning, Chris, but it's kind of falling by the wayside a little bit. What's going on here this morning?
Well, I think the more eyes that you see on it, last night you got fewer eyes on it, and you get a lot of the Chinese buying in from it. And they're the ones that need the corn more than anybody right now. And then as the U.S. wakes up and sees, and there's still a lot of corn out there to be marketed, so anytime you see the market up like that, there's the opposing side that wants a little piece of that and is more than willing to sell into it.
So what do you think of the thought that there hasn't been too much in the way of cash sales of corn and soybeans out of the field here recently, but they're making such rapid planting progress that some analysts have been telling me they think those sales could start picking up here in the next week or two already?
They could. The discount that December carries is probably the biggest rate. Everybody sees the big premiums in the front and say, well, maybe what we need to do is price it in the July contract of 22 and see if we can't pick up something. But we look out there and there's not even any premium there. So we are in a full inverted market. So maybe really the thing to do is start looking at selling either some off the combine when it's harvested, or just do some kind of basis contract that helps you out just in case things do improve a little bit and that basis begins to slip away from you.
That's a good point. Well, Chris, we're going to come back in a moment and we'll take a look at what's going on in driving the livestock trade here early this week. We're talking with Chris Swift. We'll be back after this. Let's turn back to Chris Swift of Swift Trading and take a look at our livestock trade. I want to go ahead and, Chris, if you don't mind, we'll go ahead and bring up this live cattle chart here first and take a look at what we're doing here this morning. We're a little bit weaker across the board. I noted where the nearby June contract is showing the most weakness. Right now we're down 75 cents, Chris. We're at 115.85 per hundredweight after hitting a high this morning at 116.90. So we're off of that a little over $1 right now. At that point early this morning, we would have been a little bit higher. So we have turned this one around to the downside there. How significant is that in your opinion this morning?
Well, it's pretty significant because we're still seeing very limited slaughter progress. The packer probably could kill up to 675,000. They're staying in the 650, 657 range of killing cattle. So regardless of what happens, until the packer is able to process enough product to clean up some of this backlog to it, the fat cattle market is just going to be probably continuing to move lower to get rid of these cattle.
And yet you look at the wholesale beef trade, we had the beef cutout values that came out Friday afternoon, and my word, They're getting ever closer to that $300 mark on the choice cuts. They were at $296.50. They were up another $2.74 Friday. The selects were up $3.26 at $283.05. The spread $13.45. Let's check out the feeder cattle market here this morning and see what it's doing. Currently on the feeders, we have the May contract 47 cents lower, the August down 50 cents at 146.25. How is it you have that wholesale beef trade just continuing to surge ahead every day, and yet the futures can't get anywhere here?
Well, and that is all still processing capacity. So capacity to utilization is what we all learn in our business schools, and right now we have capacity of X and are utilizing just about every single percent of it that I know it, but we still have so much product on hand that we can't seem to make a difference in it. There is just ample, plenty cattle. And our last two cattle on feed showed us on there that we're still trading several percentage points above last year for total number of cattle on feed.
Are we back to normal capacity after the COVID outbreak?
It's very close to it. There are some limitations out there that is still being hampered by employment. I know that. But we also know that robotics are coming up very quickly, not as quickly on the beef side of it as what it is on the poultry, but all of those are still making headway towards our plants. On
the lean hog trade so far this morning, on the big board, we have the May now 45 cents higher. However, June, $2.87 higher again. Remember, we're in expanded limits. We're now at 112.57, and we have the July contract $2.87 higher at 112.12. And keep in mind that June contract, which is almost $3 higher, is 60 cents off of its earlier high from right at the open. So at that point, it would have been over what the old limit had been. So we'll keep close tabs on that. But we are dealing with new contract highs again today in lean hogs. Chris, thanks for the time this morning. Good luck trading this week. Chris Swift of Swift Trading with us. Janet, I'll turn it back to you.